Good morning, everybody. Welcome to today's 1Mby1M Strategy Roundtable for Entrepreneurs. 1Mby1M, as you know, is the first and only global virtual accelerator in the world for technology startups. We operate out of Silicon Valley, but with a distributed team, a global team, and we have a global community of entrepreneurs that we work with. So it is a completely international affair. This is our 543rd free mentoring roundtable. We've been doing this for a very long time. We started back in the fall of 2008 with an experiment of, trying to do online mentoring, and that was successful, and it led to a very extensive program being launched at the end of 2010. So that has been over a decade now. The event is being recorded. Every single roundtable recording is available on our YouTube channel, 1M1M Roundtable. We've had over 150,000 people participate in these sessions. It's been extensive. On Twitter, we are at 1M1M and at Stromana. You're very welcome to follow. We publish a lot of interesting content. Today's hashtag is 1M1M on Twitter. This is a roundtable, not a broadcast. We do have scheduled programming, but we also want you to participate. So I will put these numbers up later on. You can also participate with audio through your computer audio nowadays. So all of those are options. We're going to start today's session with a conversation with Hamiz Awan, founder and partner at Plutus21 Capital. Hamiz, welcome to the show.
Thank you for having me.
So Hamiz, let's get acquainted and let's introduce you to our audience. Tell us a bit about your background as well as about Plutus21 Capital. This is the first time we have you here.
Yeah, like I said, we're very thankful for the opportunity to be here and learn from you and maybe give you some insight into our world as well. I grew up was born in Karachi, Pakistan, spent my entire life there and moved to the US to go to school, and I guess I never left. I've been involved in a few different entrepreneurial ventures before, but Plutus was my first entrepreneurial venture in the investment space. Plutus is an alternative asset manager, and we focus very heavily today on blockchain investments. The particular focus for us has been infrastructure within blockchain. So the protocols, the marketplaces, the platforms that make this entire ecosystem run. We try to make sense of those and invest in those.
And where are you operating out of, Hamiz?
Yeah, so we're based in Dallas, Texas.
In Dallas, Texas, okay. And what is the scope of Plutus's investment from a geographical standpoint?
So one of the great things about blockchain is that since the beginning, it's been a pretty global movement and a global network of opportunities and entrepreneurs and people that are building stuff here. So there really isn't a center of blockchain like maybe you might have for SaaS companies or fintech companies. It's always been a very global thing. And so our investments have no real borders. Some of them don't even have headquarters, right? Like they're just such a unique way of organizing people around a problem that some of them don't have companies or CEOs at all. And so we look for problems that need immediate solving, and a lot of times those problems are outside the US. A lot of the financial infrastructure issues and governance issues are outside the US, and so naturally the user base that we look at is usually outside the US, but the companies really are global in nature.
And what structurally, what is the structure of Plutus? Is that structured as a regular venture fund, or is there some innovation that you're doing with the fund structure as well?
Yeah, so we're innovating in that structure as well. We're actually an open-ended fund, and that's possible because we're in blockchain markets, and largely we invest in very liquid assets. And so one of the interesting things about blockchain-based assets and blockchain-based ventures is that a lot of the assets in this space are liquid, and they're not the traditional private equity that you would buy in these early stage companies. And so because we have liquidity on our end, we can actually do venture-like investing, like early stage investing, but do it with liquidity. And so that's why we're able to have an open-ended structure for most of our vehicles. We do invest from time to time in traditional private equity, these companies, and those are then structured mostly as separate special purpose vehicles that are closed-ended. But for most of our investments, we have an open-ended structure, and it kind of looks like a marriage between a hedge fund and a venture fund. You have the liquidity of a hedge fund, but you're investing as a venture investor would.
All right. So let's do some case studies. Maybe that would be the best way for us to understand how you invest, how you structure, and so forth. So pick, one or two of your investments and walk us through what they do, and how you have invested in those companies. What is the structure? What is the denomination? And so forth. And I will ask you more questions as I learn more from you.
Sure, absolutely. So one of the things that people, I think, misunderstand about blockchains is that the only disruption happening in blockchains is how they're going to disrupt business models. So they're going to come in and give, maybe Bank of America a run for their money. That's just one part of the disruption. In my view, there's two separate pieces of the disruption here. One is the disruption in the business model. The second is the disruption in how capital is being formed. So a lot of these companies are actually not going down the traditional path of fundraising. They're not going and raising capital from VCs or angel investors, but they're actually doing, they're either pre-selling their service and raising capital that way, or they're raising money through essentially like loyalty programs. So some of them look like a loyalty program, some of them might look like an equity, some of them look like commodities that can be used in the ecosystem, and they're financing their businesses like that. And so it is a little bit more difficult to understand why these different assets would have value, these digital assets would have value, but essentially there's a new part of the capital stack. You traditionally had debt and equity. Now you have debt, equity, and then digital assets. It's like a whole new piece of how these companies are raising capital. And so we have to then think about it from that perspective, like apply a lot of the things that we've learned from traditional investing, but then understand that we're in a new, world of investing. And so one example, which I'm sure a lot of people will be aware of in this call, is the Ethereum network. So the Ethereum network is essentially a plug-and-play blockchain solution. So if you would like to build a blockchain startup, you don't have to go and necessarily build a blockchain yourself. You can just plug in to the Ethereum network that already has that infrastructure, the security, the incentives already figured out, and you are just using it as if you would have used the internet to build Facebook, right? Like Facebook didn't create the internet, they just kind of plugged in on top of it. So it's similar to that. Ethereum is sort of a plug-and-play blockchain solution, and one of the biggest out there. Now, in order for anybody to use the Ethereum network, they have to pay a certain fee to the network to process their transactions. That fee has to be paid in its native digital asset, which is Ether, ETH, which is also the second largest digital asset in the world. And so one of the ways that you could invest in the growth of the Ethereum network as more people use it as a plug-and-play solution, one of the ways to invest in that growth would be to actually buy Ether. And if you buy Ether, you're essentially buying the fuel that all of the cars in the future will need. And you're holding on to this limited amount of fuel today. And that's what gives it value, because if these cars become popular and everybody in the world wants to use these cars, they're going to need the fuel to run them. And so you're essentially owning the fuel, and that's how you express your opinion on the growth of the Ethereum network.
So in terms of your investments, are you investing in only Ethereum-based businesses?
No. So Ethereum, we invest across the board, but like I said, we focus on infrastructure. So instead of picking individual applications of the technology, right? Like instead of thinking, okay, blockchains are going to be used for money transfers, or blockchain is a currency or supply chain solution. Instead of picking individual applications, what we like to do is we like to pick the platforms that all the applications are being built on. And that way, you're essentially, if you think about it from this way, you're sort of investing in the app store instead of the applications themselves. And when you invest in the app store, you kind of get really broad exposure to all of the applications out there. And you might have thousands and thousands of applications that people build, and most of them won't work. But as long as they're using the platform, the app store, to do their transactions, like, you have exposure to the growth of those applications. So it's sort of like a layer one investment strategy instead of the layers that get built on top of it. So we like to invest in those layer one and like infrastructure plays, because it gives us really broad exposure without us having to pick the winners and the individual applications.
Great. So now take us into examples of infrastructure layer investments that you have made, one or two, and talk us through what they do and what is the model.
Yeah, so we really like investing in one of the infrastructure plays that's really necessary is a marketplace. So there should be a marketplace for people to buy and sell these digital assets. And that's infrastructure, right? Like, it allows for this ecosystem to run. And so we really like that business model, because one of the great things about marketplaces is that they make money in both good markets and bad markets, right? Because they take a small fee off of every transaction. And so as long as there's an active market, and one thing we can all get any room to agree on is that the blockchain markets are active, right? Like, they're volatile. Everybody knows that. And there's business models out there, particularly the infrastructure ones, that benefit from the volatility, right? So the more volatility there is, the more transactions they process. And so one example of a company that it's really not a company, it's called Uniswap. And this is a protocol without necessarily a CEO or a company. And what they figured out was, why do we need this entire, like, the New York Stock Exchange and its infrastructure behind it, when all the New York Stock Exchange and their brokers are doing is matching a group of buyers with a group of sellers, right? Like, that's all that really is happening there, right? So why do we?
Not like a marketplace. New York Stock Exchange is a marketplace, yes.
Yeah, it's just a marketplace, right? Like, why do we need all of those people and all of those brokers and market makers to be involved? Why can't we just teach that to a computer? Why can't we just say, hey, computer program, when there's a buyer, find a seller and match the two and get it done? Why do we need to have these entire, like, organizations and businesses that take a cut off of all of those fees? And so what they did was they taught that concept to a computer program that was built on Ethereum. It's called Uniswap. And Uniswap today is trading $1 billion or more assets without any people involved or any companies involved at all. You're able to essentially go peer to peer. So if you want to sell an asset and I want to buy it, we can just do that directly. There isn't a need for a broker and a clearinghouse and a bank to be involved in that. It's just you and me going directly with each other. So we like those type of plays where they're essentially disintermediating entire businesses by teaching that business to a piece of software. And the software is infinitely scalable, right? So the cost of running that software for an entire year might be the cost of a few employees at JP Morgan or something, right? Like, it's just so much more efficient and cheaper to run it, that we believe over time, programs like Uniswap are really going to give traditional businesses a run for their money. And that's why we want to invest in them.
And how do you, so now explain the structure in one of these cases when you are investing as Plutus21, what is the structure of that investment?
Yeah, so in Uniswap's example, there's a token called Uni, which is the governance token for the protocol. And so, like, how does a company that doesn't have a CEO make decisions? Well, it's actually the community that makes the decision, and they vote on that decision using their token. So their token gives them a voting right, essentially, on the protocol. And that is that is the asset that we invest in. Now, investing in that asset gives us voting rights today, but we believe in the future that will give us a piece of their cash flows as well, or some connection to their cash flow somehow. But today it really is a governance token, so it gives us a voting right in the system. And some of them are structured like that. Some of them look like governance tokens, and then some of them, like I said, look like commodities or maybe look like pre-sale of a service. But that's how you.
What kind of denominations are we talking to buy into this exchange with a governance token? How much money are you putting in?
So we would take our investments are based off of the adoption numbers. So the more there's adoption, the bigger the positions become. If there's an established name like Ethereum or Bitcoin with millions of users, that can be a very significant position for us, 10% or more of the fund. And so that could be $10 million or more. But then we also want to learn about smaller protocols that are doing something innovative. So we might only put 0.25% of the fund. That might be $25,000 or $50,000, so that we can watch the development of that protocol closely and keep up with them. So check sizes, I guess, range from. We're not a traditional VC, so I don't really like to call them check sizes, but we range from like $25,000 on the low end all the way up to. I think the biggest position we have might be more than $15 million.
And how big is the fund?
The fund is about 100 million. We have a few different funds. If you put them together, they're about 100 million.
Asset under management is 100 million. And so let's say you have this kind of governance right in a particular community. What is the progression of your investment? How does that play out? And maybe it hasn't played out fully yet for you, but you have a theory on how this is going to play out and how you achieve liquidity and returns on investments. So explain that model a bit more.
Yeah, so the model really has been flipped on its head, right? Because the asset is liquid every day, and I have a price for it every day, and I have liquidity for it every day. So I could sell my entire position today, and I could buy it back tomorrow, right? So it's really like very different than venture investing. But our usual time frame is about 3 to 5 years, because that's how long we believe it takes to get from about 10,000 users, which is where we take a significant position, all the way to a million users or more. And it will be at that million user mark where we will start to think about, okay, this has ran the cycle of our investment thesis, and that's when we would start to take money off the table. We found that it's much easier to figure out who's going to get 1 million users when they already have 10,000 instead of when they have 0 users. So we're not the seed early stage investors. Like, we usually try to watch them closely up to that $10,000 mark, the 10,000 user mark, and then at 10,000 users we have a lot of conviction and we take positions in size. So adoption really is the number one factor for us as we invest, because one of the things to understand about the blockchain space, and obviously, like anything I talk about is not investment advice. Like, I'm not an expert on any of these things. I'm just trying to learn as much as I can. But one of the things to understand is that all of the software in the blockchain space, most of the software in the blockchain space is open source. So you can see it and I can see it and you can copy it and you can create your own version of the same thing. So the way that you protect your business is not by having the best software. The way you protect your business is by having the most network effects. So the most durable competitive advantage in an open source environment are network effects. Because even in Uber's example, Uber's application can be replicated. but Uber's users and drivers are very difficult to replicate. That's what gives Uber value. So the same thing is true here, where the software is actually open source and anybody can copy it. So the only reason that one network survives and the other one fails is that they had the users and the adoption numbers that even though their network could be copied, their software could be copied, you couldn't copy their user base. And that's what gave them value over time. That's why adoption is so important to us, is because we feel that's really the only durable competitive advantage.
So I want to probe that point a little bit. We have done a lot with two-sided marketplaces in our community. We see two-sided marketplaces all the time. We have lots of case studies. We have courses, curriculum material on it. And we see a lot of entrepreneurs trying to build two-sided marketplaces. As you rightly said, it's much more difficult to go from 0 to 10,000 than to go from 10,000 to 1 million when the network effect starts to kick in gear in two-sided marketplaces. And that's not just true in blockchain, that's true in two-sided marketplaces in general.
Yep.
So what have you learned to go from 0 to 10,000? What are people doing that you have seen is working?
Yeah, and this might sound like sort of like soft advice, not something that is like really actionable. But what I've seen consistently with the ones that have achieved that is that they're extremely community focused. So one of the reasons that blockchain networks have grown so much without really like Bitcoin doesn't have a CEO, it doesn't have a marketing budget, right? Like why has it become $1 trillion asset? It's because of the community. There's like this community of people and like this volunteer like firefighting force or whatever you want to call it that's like always out there and like believes in this stuff like so dearly that
energy within the community that drives its momentum.
Yeah, exactly. And so from day one, the companies that we've seen really be successful are the ones that are community focused. The CEOs aren't just talking to investors all the time. The CEOs have a weekly Ask Me Anything. These are CEOs of multi-billion-dollar companies. And on every Friday, you can jump on their Twitter and ask them anything you like. Whether you're a $10 user or a $1 million user, it doesn't matter, right? And they have this like communities that are being built on Discord and Twitter and like non-traditional platforms like that, where I think a lot of early stage CEOs are so focused on the product and so focused on the fundraising that the only interaction they have with the customers is through like periodic surveys, but they don't build like this rapport with their customers, right? Like they don't build a rapport with their suppliers and don't talk to them on a daily basis. Like if you look at a CEO schedule, right, the traditional startup CEO schedule, customers are not on it on a regular basis, right? It's usually the team.
This is a point that we are driving home all the time, is that customer matters a lot more than investors. Do not chase investors, chase customers instead. It's a better use of your time.
Yeah. People will even spend time like doing competitor research in their daily tasks, but they will not spend time speaking to at least one customer every day or a bunch of customers every day. And we've seen this in Amazon's example as well, right? Like whether it's true or not, like Jeff Bezos has always said, I'm customer focused, right? Like I don't care about the short-term returns for investors. I'm customer focused. I'm obsessive about that. And so the ones that I've seen be the most successful are the ones who spend more time with customers than they do with any other stakeholder. And those are the ones that are really solving problems and really have the empathy that you need to build great software. Great software comes from a place of empathy. That's the first place that great software comes from. And so the people that have built time in their day to improve their empathy for the user are the ones that are successful.
Hamiz, could you talk about what kind, you're investing in that layer one, the infrastructure layer. What's happening above that layer? What kinds of applications, what kinds of communities, what kinds of marketplaces are being built on top of your infrastructure layer companies?
Yeah, it's like such an incredible pace of innovation that if you spend a few years on it, like the way that I have, you're still going to feel like you're a beginner because there's just so much going on. I'm sure you've heard of NFTs by now. I'm sure you've heard of DeFi, decentralized finance. Like those are just like two of the hundreds of things that are happening in this space, but those have caught people's attention, right? And one of the important things about NFTs is that two things. So one is today NFTs are focused on collectibles and art pieces and things like that. But an NFT is just like it's like a platform. So it's sort of like the internet, and entrepreneurs from around the world are going to build all kinds of applications on top of it that we can't even imagine today. So that's one
Nice.
thing, and it's a theme that's here to stay. The second thing
Have
is,
you invested in an NFT platform?
yeah, so we do have investments in NFT platforms that we're not disclosing right now because we're just building them out. But we are actively looking at that theme, and we have been for the last 3 years. We didn't even call it NFTs 3 years ago, but we liked that theme where there was digital scarcity in collectibles. The other thing about NFTs is that most NFTs are going to be worthless. There's a lot of hype and mania in this space, and somebody is going to be left holding the bag, right? And there's going to be a lot of that happening. But what's important is that as celebrities and people that have influence get involved in the space, like Mike Tyson sold an NFT for I think $300,000 the other day for a weekend with him, right? Like he sold an NFT. What's important with that is all these people that are that are connected to those influencers are going to come into the blockchain space because Mike Tyson is doing an NFT, right? And most of them are going to test it out, experiment with it, and most of them are going to leave. But some of them are going to stay for the technology. They kind of came in for the hype, but they're going to stay for the technology. And so the way that you go mainstream is you have these like, media grabbing headlines, and those bring a lot of people in this space, and most of them leave, but some of them stay. And that's how you get to mainstream adoption, because the fans of Taylor Swift or The Rock that have never thought about blockchain beyond a currency are now going to see it in a different light, and some of them are going to love the experience and they're going to stay in the ecosystem forever. So that's how you're going to slowly go mainstream. You need these NFT manias and DeFi manias to happen to bring the masses into the blockchain sphere.
So, Hamiz, I want to comment on that. Actually, I want to use a different example that I've been kind of following in the NFT hype cycle, let's call it, is the example of Damien Hirst. Have you seen that Damien Hirst said that he was going to, for those of you who are not familiar with Damien Hirst, he's a very famous British artist, sculptor, and painter and so forth. So he jumped on the NFT bandwagon, and he said, I think he's going to create some large number of artworks that are connected to NFTs. So these are not digital artworks, I think, to begin with. I think they're physical artworks that have an NFT tie-in. Have you seen this? That requires a different infrastructure. Have you seen this infrastructure developing? This actually makes a lot of sense to me.
Yeah, that's what I said, right? Like NFTs are just like a concept, a platform for people to innovate. Some people are going to say, oh, we're going to have a physical item represented with an NFT. Some people are going to say it's going to be pure NFT. Some celebrities, like I was mentioning with Mike Tyson, are seeing them as experiences. So what he sold for $300,000 was a weekend with him, and he would train you. Like that's basically what he sold, right? That's not art.
Yeah.
Right? But that's like just an experience. And so if tomorrow, like Taylor Swift comes out and says, I'm going to launch an NFT, and if you have my NFT, you get front row seats in all of my concerts, and you can come backstage with me. Like, what do you think that's worth? That's worth a lot of money to a lot of people, right? So, and then once one
but just a second, these are two different case studies use cases that you described. The one with Mike Tyson is one weekend with Mike Tyson. That's, you don't need an NFT to sell that. because that's not, you cannot resell that. That's one weekend with Mike Tyson. You are not getting multiple weekends with Mike Tyson. Taylor Swift, that could be a NFT, because that's a privilege, that is a recurring privilege, and there's value in buying that and exchanging that and auctioning that even.
Yep.
So
yeah, and like Taylor Swift's thing could be even simpler than that. She could just say, hey, whatever songs I launch, people with my NFT get it 5 days before anybody else does. Right? Like it could be something as simple as that. But what's happening with the Mike Tyson NFT is that the picture, the NFT that they actually sold, will now be a memorabilia forever. That was my weekend with Mike Tyson, and I have this to prove it. Like I own that experience, right? So there's going to be all kinds of innovation. Some of it is going to stick. Most of it is not going to stick, right? But again, like I'm not an expert on NFTs. I just like to invest in the platforms that help people create and sell NFTs, because whether they like the experience or not, right? Like the platforms are benefiting from that interest in NFTs.
So I mean, on that topic, I would say that if I put on your hat, I would look for a platform that actually applies the NFT principle and facilitates doing this hybrid NFTs, the physical, virtual combined NFTs for the art world, because the art world actually has a real problem, right? Fraud is rampant. So I think the art world should anchor itself in the blockchain infrastructure of the world with NFTs and everything, so that the fraud can be zero. The art world, if they apply the blockchain principles, can get to a zero fraud solution. Given where we are today, given the fact that the infrastructure exists, the base layer infrastructure exists. But I think you need another couple of layers on top of that base layer to make that possible. So if I were you, I would look for that solution, because that solution is going to be big.
Sure, absolutely. You see, like now your ideas are churning in your head, and we can all imagine a use case for that. And there's a lot of hype here, right? But there are going to be a few use cases that stick, right? And we just need a few of them to stick. We don't need every single idea to work for this to be really transformative for the entire world, really. And one of the you talk about like rights of artists. One of the really great things about this is you can enforce those rights within the NFTs. You can say every time you play this song, the artist gets paid a certain amount. And then if this art piece gets sold again, the artist gets a cut of the new sale price. You can enforce all of that using an NFT, which is not possible today, right? So there's just so
well, and it's full of intermediaries. Just like you gave the example of New York Stock Exchange, it's full of intermediaries, full of bloat. The art world is full of bloat, and if you have the infrastructure to be able to remove a lot of that intermediary or make those intermediaries more productive somehow. Right now, it's very difficult for artists to reach collectors. I actually have an article that Maureen can share in the public chat, and you can take a look at it, that I published on my idea of how that world should play out, anchored on blockchain. So anyway.
So that's what keeps us excited about this space, is that there's so much great innovation happening that a few of them is going to be totally transformational. Most of it is not going to work. That's just the truth, right? But just a few of them need to work for this to transform how we do things and how we do business.
Very cool. This is a fascinating conversation, Hamiz. Thank you for this. Shall we listen to some entrepreneurs and what they're doing?
Absolutely.
So folks, just to set some expectations, this is a safe working session. You don't need to be nervous. You don't need to be defensive. We're on your side. Whatever discussion we're going to have here is a constructive effort to accelerate your journey as an entrepreneur. We are completely on your side. You can disagree with me, no problem. You know, it's your venture. You are going to determine the strategy. You are going to determine how you're going to play your cards, how you're going to play your hand. So just listen, because the conversation we're going to have is based on some experience, and we will raise issues that you will need to address. So Sanjib Nayak from Sacramento, California will go first. Sanjiv, please unmute your line and tell us what you're working on.
Good day, everyone. Thank you for the opportunity. And I'm Sanjib Nayak, the founder and CEO of xFusion Technologies, an organization. We are a consulting company primarily in GovTech arena. Um, we are serving primarily the state and local governments. We executed project, we participated and played leadership role in projects from small scale, like from 5 million to $1 billion project. With that, we've been an architecture and strategy firm, and I myself, I'm an enterprise architect and worked as an advisor for the CIOs and the chief architects for the state. And we have seen the challenges for massive data integration area. I mean, we are talking about executing very large scale projects, billion-dollar projects, and we have seen challenges there. What we have learned that there are unaddressed pain points, and the key objective then that motivated us to build a solution that everyone is building a technology, a piece, a dot, but the fundamental and critical problem in the data and analytics world is not being addressed. So that's why even those problems are the ones that are the root cause why 2/3 of the organizations, they can justify the perceived value in terms of time, cost, quality, trust, and risk. Um, so we adapted a mechanism, four primary pillar: collaboration, integration, automation, and simplification. So this is the mechanism we adapted, and we have developed in last 2.5 years. We spent time on this. We developed what is called a concept called data pipeline automation. So and we offer it as a service, which is what Gardner created the term called data ops. And I think we gone one step ahead of that with the capability model that they established. And we call it more appropriately, we think it's a data pipeline automation. The goal is to accelerate time to insight from data at scale. That is number one. Number two, and which is equally critical, is simplifying the solution for complex data problem in terms of time, cost, quality, trust, and risk. Next slide, please. So let's look at the problem. And so last decade, over a decade, the data problems, every organization, their main survival factor and then innovation factor, how they will do with the data. So investors pumped in money and the technology innovation skyrocketed at a hyper growth, but still 2/3 of the organization, they cannot justify the business values. The problem is not the technology. We have a lot of technology, we have a lot of power. But the problem is those under this challenge, they are more related to people, business process, and the culture. How we approach the whole problem. So recent study in 2021 that shows that from New Vintage Partners, 92% of the companies who responded, they said the reason why we are not successful because of people, process, and culture. Then, and 8% says technology barrier only. So that's the biggest side of the challenge. And those challenges primarily growing technology complexities. Your technology is growing exponentially. The new innovations, that is adding the complexities to the mix, and the technology growth itself becoming an antipattern for adoption of those technology. We have seen many large-scale projects. The vendors are coming with 30 different technology as dots, and then okay, we need all these icons to build your solution. The business, wait a minute, did you ever build a solution connecting all these dots? Do they work together? And how long does it take to build that? And then even if you build that and get your business solution on that, after you leave, how do I get these 30 different expertise in my organization to maintain this? And then traditional brick and mortar approach that I go to a grocery store, I buy all the ingredients, and I use my innovation as a best chef in the world. I try to cook, and then I use a kitchen, right? So that has created isolated dots, silos of tools, process, and technology, ETL, AI, master data management, metadata management. They are all silos of data, process, and people. And the interoperability is lost, the efficiency is lost. So that's one bottleneck over there. And then, so what we have done is what is called data pipeline automation. And here, the primary thing, we wanted to empower less technology-savvy business users to simplification, UX, holistic solution, not a piecemeal, a total solution end-to-end, no-code, low-code platform to accelerate time to delivery, self-service, so that they can do it by yourself, and one collaboration platform. We are not talking one technology or one solution. It's a platform for all the data roles to collaborate, logging into one platform and do the job. Democratize the enterprise knowledge of enterprise data asset to eliminate the critical dependencies on SMEs, and then data pipeline lifecycle automation. As I said, the solution. Yeah.
We have spent quite a bit of time already. I think your pitch requires work to, you shouldn't be spending so much time in the front end on the stuff that you've spent, but let me try to cut through this and get to where you are. What have you done so far?
Okay.
Do you have customers, actual customers who are using your solution?
So we are at a stage where we are engaging the beta customers and developing their proof of concept and piloting. And also, we are going to start the user piloting, the user persona. So actual data engineers, data scientists, the community of them, we are engaging them to work on this solution and get their
feedback. What does that mean? We are engaging as a present continuous statement. Well, what does that mean? Do you have a beta customer? One or two beta customers already?
Yes. Yeah. We have one or two beta customer. Yeah.
And they are enterprise software, enterprise users, enterprise companies?
Yes.
And is this the government? Are these within the government sector? Is that where
one in the government sector, and we have started working with another company in Silicon Valley. They're a financial company. And then we are talking to two other companies now, one in oil and gas, and another one is in financial sector as well. So, yeah.
And what is the use case that you're going in through? What pain point are you going in to solve?
So the primary pain points that we are trying to solve is the speed of delivery, the cost, how fast we can deliver the solution or what the business users want, that critical dependencies on the technology that we are eliminating. So you don't need to write no Python, you don't need to know DevOps technologies and all. You have a interactive UX, everything is driven through UI.
Hang on. How did you get these customers? Like, what conversation with these customers resulted in them signing up to become beta customers?
So we interview the customers. First, we try to understand what is their problems, what is that they are doing in the data world, and what is their problem.
But why do they agree to talk to you? Is this because you knew them from before, or what, you had previous relationships?
Yes, some through those. Yes. Through the network, we reached out to them, and they.
Because I think my problem with your pitch and everything you've said today is it's very generic, and generic doesn't create repeatable sales cycles. Right. So in where you are, and all these logos that you have on the screen, the Alteryx and the Domos, these are big companies, right? Sisense, these are very large companies. So they have very precise positioning with which they can go into accounts and sell.
Right.
So if you want to become a significant size companies and create a repeatable, sales mechanism, you will have to be able to clearly articulate very precisely, very sharply, who is the customer, what is the use case, what is the pain point, what is the pain extraction question, etc. We have complete methodology that we apply to this whole process. And the problem I have with your pitch is that your pitch is not going to work the minute you apply this pitch to our methodology, it's going to fall flat. And that means that you will not be able to recruit customers, and that's just not an option. You cannot build a business without recruiting customers.
That's right.
So, I mean, you starting a pitch by saying your solution has unique value proposition, faster, best, better, cheaper. This is one of the most lame value propositions you can come up with, because nobody's going to buy that. You know, who's going to believe you? What is it that you're doing, and why should you be taken seriously is a question that I did not get an answer to in the pitch that you made so far. Okay. So I think you have a lot of domain knowledge in data operation and data management, master data management, unified data management, and these are big fields. I think you do have expertise, but your pitch just doesn't work.
Right.
Okay.
So this is the first time I am trying to do a pitch, to be honest with you. So
okay.
we've been busy developing product, and now we are at a stage that where we are now is, okay, we have 90% of our product developed, and now we need to get to the market for two reasons. One, acquiring customer. Second,
that's another thing I strongly advise again. You should not be developing products without customers in the loop. If you cannot explain what does your product do to customers and get customers to become beta customers before you start building the product, the chances that you're building the wrong product is very, very high. So ASAP, you figure out how to pitch this product and how to get validation on whether you have the right product and what problem does this product solve. So the good news is you're a developer yourself, right?
Yeah, I don't do, yeah, you can say that. Yeah, it's basically I'm the product officer for this product, and the whole vision and the concept is mine. We have a whole team working on building the product. Yes.
Right. So, but you're a technical person.
Yes. Yes.
You're a highly technical person, not just a technical person. You're a highly technical, highly intelligent person. So, as far as I'm concerned, your profile is the kind of profile that we're very, very comfortable teaching the business side. So, if you want to learn the business side, we can teach you the business side. But you're going to have to put in some work. You're going to have to put in some studying. I will explain later on in the program how to do that. Hamiz, I did not necessarily bring you into this conversation because I think you probably are struggling with the same things that I'm struggling with, is trying to understand what Sanjiv is doing. Do you have any other comments?
Yeah, no, Sanjeev, I think we all walked away with an appreciation of your technical knowledge, right? So everybody was like, okay, he definitely knows what he's doing here, right? But it should be something that comes, we shouldn't walk away from the presentation confused on what you do, right? Like we should, within the first few slides, know exactly the problem in like one slide, and then in the next slide, know exactly the solution. And the more specific you make your solution and the way you word it, the more impactful it is. I think sometimes what entrepreneurs struggle with is they think if they say something specific, the scope of their business will look small, but it's the exact specificity that the investors are looking for. They're looking for you to change the world, but start with one problem at a time, right? So you tell us like the exact problem and the exact solution. And then in a later slide, you can sort of talk about all of the different businesses that you can disrupt over time. But I would say within about 30 seconds, I want to understand exactly the problem and the solution. If it takes more than 30 seconds, I usually start checking my emails.
There we go. There we go. You got the same message from both of us in different words, but the point is you have to get across your point very, very quickly. And I spent too much time or we as a group here today have spent too much time listening to you and not understanding what you're doing, and that is not acceptable. You cannot go forward with that being the case.
Right.
Okay?
Got it. Thank you. Thank you both of you.
You're very welcome.
Mhm.
All right, Suran, you are up next.
Sure. Thank you so much for having me. I actually found out about 1Mby1M a few days ago from my PR agency, and I'm currently 39 and a half weeks pregnant. So I was hoping I don't go into labor before I gave this presentation.
Oh my goodness.
So thank you so much. I took the few days to listen to all of the roundtable talks, and I feel like your philosophy on bootstrapping really resonated with me. We've been bootstrapping my business for the past 1.5 years, and so I'd love to tell you a little bit more about Silk or Lace and seek your advice on, now that we have bootstrapped, what your advice would be on how we move forward. So Silk or Lace is the first marketplace for boutique luxury hair pieces for women. We launched in April 2020, and we've reached over 400K in total sales just this year. We currently have 11 partner brands and an average of 350 SKUs available currently on the platform. I started this company because I personally struggled with my own journey with alopecia. Starting from age 23, I lost half my head of hair and spent the last 5 years searching for a solution that worked for me. I went through all sorts of treatments and solutions, and it really wasn't until I found hair pieces that I felt like this was a solution that made me feel like myself again. And it turns out that I'm not the only one. 30 million women in the US alone suffer from hereditary hair loss, and 40% of women have detectable hair loss before the age of 50. We often think that it's older women, right? But it's also younger women. And it turns out there are dollars behind this. $8.4 billion is the value of the global alopecia treatment industry, half of that going towards women. The problem is, from my own experience as well, is that a lot of these treatments have zero or very low efficacy for most women. I've seen a lot of growing consumer interest for hair pieces as a hair loss solution. There isn't a lot of data on this because a lot of women don't want to talk about it. It's a very secretive industry, but we've seen through some Google keyword trends that I've been able to pull that target females with alopecia, that we do see this growing interest that you see here, along with the market size for wigs and hair pieces. Next slide, please. So what is the problem with hair pieces then in the market? What you think you're buying to the left is often what you get actually in the mail on the right. It's a very highly secretive industry. There's no price transparency. You can buy the same wig at the wig store for $10 and also for $900. You can see it for $1,000 and then also at the next store for $5,000. A lot of these wigs are very expensive and very crappy. The market is highly fragmented with lots of little sort of cash-based wig stores, or you see them online on Amazon, and it's really hard to understand what you're buying and finding high quality. Silk or Lace is the marketplace that offers customers this modern experience. So right now, we've been able to do a few things by enabling customers to shop across brands, custom source filters, things like that. So this is kind of our marketplace slide that you see here. We have, like I mentioned, over 400K in total sales. This is based on commission. We charge 10% to 12% commission on the pieces that we sell and our net revenue. Now I know that this is not, the margins are fairly low, but we plan on growing with our private label brands, increasing our commission rates over time as we grow, knowing that we are in our second year of business, and automating and making things more efficient. My inspiration has been with Revolve Clothing. So Revolve Clothing, they have about 19 brands that are privately owned, and they are what is driving a lot of their net sales. And we plan on doing the same thing with Silk or Lace. So we've tested a few of these private label brands by doing these limited time only drops that has contributed to some of our net revenue this year. And we've done 2 private label limited time only drops, and we've sold out on both of them. And so at a small scale, I've been able to prove that there is a demand for the private label in-house brands that we launch in addition to our marketplace, and it doesn't cannibalize our marketplace sales. Next slide, please. this is just a quick snapshot of where we're going. Right now, we are doing what we call a concierge service for one side of our platform where we sell lightly worn pieces. We are transitioning that so that customers can upload pieces on their own, being able to scale our DIY lightly worn section. I can go into that later if you would like. And then launching a few private label lines that will increase our revenue and adding more partner brands to our website. Now, this is considering that we'll continue to bootstrap and be self-funded, and the next slide will show that. But this is kind of what we project going forward. All of the business has been bootstrapping, personal funding. I've invested 150K last year and expecting to invest another 100K in this year as well. And a lot of it has been going to website development, cost of goods, things like that. But what's really great news is that from a day-to-day operational basis, we're able to now fund that through just ongoing profits of the business. And so further investments are just for cost of goods and marketing to educate the consumer. My question has been, is this VC fundable? I know that this is a pretty small niche. However, because of the trends, I have seen this niche grow very fast. Each private label brand we've seen from other brands on our marketplace bring in a revenue of 1 million in their second year and then 3 million in their second and third year with only 3 employees. And so I believe that as we build trust in the marketplace and we recognize white space opportunities with the marketplace data to bring in private label brands that will start generating revenue for us. And then looking at other verticals like going wholesale, targeting salons, or even targeting hospitals.
So is it fundable in its current state? Probably not.
Right.
But, and I'll show you what's the gate issue. Mm-hmm. The trajectory of growth is very low. Mm-hmm. And that's fine. For a bootstrap company, this is perfectly fine. But if you want to convince investors, you're going to have to convince them how to go from $0 to $100 million or $1 million to $100 million in 5 to 7 years. Mm-hmm. And you have to show a business plan to support that kind of growth.
Right.
Venture capitalists are looking for a very particular high growth, really, really high growth company. So you're going to need to create strategy around all this to present something that is a high growth business, if that is your goal. Mm-hmm. And, until then, you're going to have to bootstrap. So, I mean, basically, the 1 million by 1 million philosophy is bootstrap first, raise money later. So in any case, we have come to the conclusion that almost everything, barring maybe a little bit of things here and there where people are repeat entrepreneurs or there's a few different categories where you can maybe raise money off the bat, but mostly we see investors requiring bootstrapping first and then raise money later.
Right.
So what I would suggest, actually, for both you and Sanjeev, I'm going to point you to a set of Udemy courses. So Maureen, if you could share the link to our Udemy courses page on the blog. If you could open this page up, for you, Suran, I would suggest we have just actually yesterday released our e-commerce course.
Okay.
You should go do that one. And right now there's a promotion on Udemy, so you can get it for under $15.
Okay.
And there is also there's a whole set of bootstrapping courses: bootstrap first, raise money later, bootstrap with a paycheck, bootstrapping, building a company as a solo entrepreneur. You can look at those. And the other one that you should look at is building a two-sided marketplace.
Yeah.
Okay, so there are probably, I would say if you can just pick up like 10 courses from Udemy, they will give you well, there's also the how investors think series of courses that would also help you frame, what you need to know about becoming fundable. You can also obviously join the premium program, the 1 million by 1 million premium program, and I will advise you along the way. Whatever is comfortable for you is fine, but I'm just saying that the most inexpensive option of starting to learn methodology would be to go through Udemy and starting to learn the courses at your own time. Sanjiv, for you also, I think you should take a look at these courses. And there is in particular one course called Bootstrapping Using Services that you should do, because I think given the kind of thing that you're doing in enterprise software, product market fit discovery, bootstrapping using services is a very effective mechanism. So in the customers that you have managed to establish some dialogue with, it may not be a bad idea to frame those conversations and those contract situations as bootstrapping using services types of contracts. So, so I would strongly recommend that you could, start learning the 1M methodology through the Udemy courses, and then there are many other ways that you can engage. I will explain that in a moment, but it may be a very good starting point for you. Let me just check what other questions. Does the marketplace come first and we fundraise, or do we focus on increasing profits first? As I said, I think you're not ready for fundraising yet, Suran. So you have to keep things going at a level where you can be self-sustainable, and then be building blocks so that we can start a funding round if that's what you want to do.
I think what I should have done in this sort of development timeline, this was based on, because a lot of the inventory is very expensive. One human hair piece costs $600. So the projections were based on what I could personally afford while bootstrapping and the projected revenue. But if we were to gain funding, I could buy a lot more inventory and be able to, because we sell out, be able to buy more. So I think what I should have done in the development timeline is build in, if we got funding, what would that look like? And show projections that way.
But there are other mechanisms for inventory financing that you can access that is not venture financing. That's what you should do. So venture financing is going to be difficult to get given where you are, but you definitely should be able to access fundraising like Cabbage or On Deck kind of financing. You should be able to access, and that will help you buy inventory.
Okay.
So all that I've covered in the e-commerce course, by the way. So I think that would be very valuable for you. And I've also covered zero logistics, dropship kinds of issues. So all of that, I think, is going to be helpful for you.
Okay.
Yeah. So your question actually is answered. What are the funding options for a business that has a smaller TAM or for niche industries? All that all that I've addressed. And I think that will get you to a faster velocity. Remember when we were talking earlier, we said in a marketplace, it's hard to go from 0 to 10,000 users, but it's not as difficult to go from 10,000 to million users when the network effect starts to kick in gear. So you are in that 0 to 10,000 phase. That's where you are bootstrapping, and when it scales, and you use alternative financing to get to a point where you hit velocity, and when you hit velocity, you can raise venture financing.
Got it.
Okay?
Thank you.
You're very welcome. All right, folks, I'm going to spend actually a few minutes explaining to you how to use the resources of 1 million by 1 million. We did spend some time just now on Udemy already. But if you like what we do here, by the way, please refer entrepreneurs to 1 million by 1 million. Everything is on 1Mby1M.com. You can go start reading the blog and you will learn a lot. You can start with the Entrepreneur Journeys book series and you will learn a lot. That's a case study-based series of books. These free roundtables happen every week. You can come back as many times as you want and you can ask questions. You can pitch once for free, but you can certainly ask questions every week. And we are here almost every week, bar maybe 3 or 4 times a year, but we are here every week. The premium program is what you use if you want to engage with me around pitches and strategy extensively on a weekly basis or even a monthly basis. So if you want to go to more involved engagement with me, then you have to be in the premium program. Also, the other things you get in the premium, you have access to the full 1M by1M curriculum in the premium program. You get help with business development, you get help with strategy consulting. So this kind of project-based consulting we do on a weekly basis in the premium program. And then we work with over 500 investors in the industry, and you will see if you go through my coverage of what it takes to get funding, we stress a lot on a phenomenon which is investor-entrepreneur fit. Just like you're looking for product market fit, to raise money, you're going to have to get to investor-entrepreneur fit, which is why we want you to understand how investors think. So within the premium program, once you're ready, within half an hour, I can introduce you to 30 investors. But you have to be ready. It's getting ready that takes time. It's not my sending the emails to introduce you to those investors. We have the relationships. The investors are looking for our introductions. All of that hard work is already done, and they're there. They will look at stuff that we send them if it fits their investment model. But getting you ready and getting you ready to be introduced is what takes the heavy lifting. So all of that is part of the premium program. If you want to raise money through us, you will have to be in the premium program. So, my suggestion often is that do the self-assessment. We have provided the self-assessment questionnaire for free on the website. You can go ask yourself these questions and see if you can answer them in a compelling way and see if you can make a case to go from 0 to 100 million in 5 to 7 years if you want to raise money, venture money. If not, you have work to do, and that's where bootstrapping comes in. Do the bootstrapping course. We have a free bootstrapping course on the blog. It's pinned to the top of the blog. This is a course that I developed for LinkedIn. It was a commissioned piece, and it's just under 1 hour. So you will get a very good, kind of framework guideline from there. And then the Udemy courses are also, this summer, we've spent the summer releasing 26 courses on Udemy to really make it affordable and easy to access. So the courses range from $40, $80, $100, but the e-commerce course is actually $100 some. But right now, because there's a promotion going on, you can actually pick up these courses. And Udemy does ongoing promotions. If you're strategic about it, and if you pay attention to their promotions, you can buy 10 courses for $10 each and really get into the methodology very efficiently at a very cost-effective price point. You also have the option of accessing the entire 1M by1M curriculum material on 1M by1M Basic, which is our curriculum-only option. On premium, curriculum is included, but you can also access the curriculum only for $99 per month. Whatever works for you is fine. All of those are options that we offer. Go to the website, dig around, look at what to expect from premium, basic, look at the Udemy courses, look at the video FAQs on the website, and look at the curriculum description and see what is the best way for you to start learning. Learning is what is going to set you free. The more you know, the more wise decisions you will be able to make and not waste time. If you go chasing investors prematurely, you're going to just basically run out of your runway and not spend time on the things that you need to spend time on. We teach and we run this entire program on a case study-based philosophy. Everything we say is validated with case studies. I do not pull anything out of the hat. Every methodology element that we have developed is anchored and pinned in great case studies. So please, study the case studies and get in the heads of people who have done it before you and follow their guidelines. You will very often find blueprints of what other people have done within our curriculum and the case studies that you can just copy and it would work fine. On the investor introduction page, we have explained the whole investor introduction philosophy, this concept of investor-entrepreneur fit. So do take a look at that. That's it. Our methodology is bootstrap first, raise money later. We have free roundtables every week in September, so you're very welcome to come back and talk and, or pitch if you haven't pitched yet. All that is fine. I'm ready to take questions, happy to take questions from either of you, more questions, Suran, Sanjiv, as well as other people in the room. And I think there is somebody is sending me a private message asking a question. Now, if you could please put in your questions in the public chat, that is the best way to ask questions so that everybody can see what you are saying. So let me, I have a question from Binu Zakaria. The question is it advisable to use open source software to develop my solution? Are there any disadvantages in using open source resources for application development in the long run? I don't think so. I think you can use open source. A lot of software developers use a lot of open source technology. In fact, we have a partnership that we are about to launch. We have pre-launched it already with DataStax. This is for open source developers developing on the Cassandra framework. We have a partnership, a co-branded accelerator that is starting. It will be launching on September 9th. So the open source world is very active in entrepreneurship, and we definitely want to work with you more, and definitely using the open source infrastructure, not just for acquiring pieces of software, but also to go to market. There's a lot of go-to-market strategies in open source that are very, very interesting go-to-market strategies, and we have a lot of case studies of that as well. So please feel free to continue asking questions in public chat. After this session, if you want to reach somebody, Irina Patterson is your contact to ask questions about the 1M1M program. Anybody else? Any other questions, comments, introductions? Anybody?
Sravana, there's a pretty interesting thing that you said about the open source, and I like to talk more maybe later phase, because our entire solution is basically automating and integrating entire open source stack. And basically the challenges in the open source stack is you need to know a lot of technologies, a lot of skills to make it working. And here we made the open source stack working without and that will let you to build your data pipeline without knowing the technology. So that's what we automated. Like our entire solution is automating the stack with Apache Airflow, and that was developed by Airbnb, and for data pipeline orchestration. And then everything that is used by Databricks today, Apache Spark, Delta Lake, and S3 and Parquet. So that's for massive data processing. That's our infrastructure there. But the good thing here is you just drag and drop and do stuff. The code is generated in the back. So it's basically we have capitalized the open source world, but we are bringing this experience to the data engineers and the data scientists to prepare their data and to do all the stuff with data without knowing the technology.
Sanjiv, I have no doubt that you have something valuable in what you have shown. That is not your problem. The problem is how to pitch it. The problem is what is the go-to-market strategy, what is the positioning for your company. And I'm more than happy to help you figure all of that out. I think we are perfectly equipped to help you figure all of that out. So we'll be happy to work with you.
So who do I contact, to get to the next level or premium program and things like that?
Premium program, you just go to the website and sign up.
Okay.
So just go to 1Mby1M.com and sign up.
Okay.
And then you can start attending roundtables. I will give you homework. You will be able to use the curriculum, and we can get you going.
Okay.
All right.
Good.
Okay, folks, I don't see any other questions, so we're going to adjourn. I hope you found the session helpful, and I will see you next week. Thank you very much for coming today. Bye, everybody.
Thank you. Bye.